Good morning, everybody. It's Tuesday, August 6th, 5:31 a.m. Central Time. A little bit of a turnaround Tuesday in a lot of markets this morning. Grains are lower. Global equity markets a little bit higher after yesterday's collapse. Let's start off with this grain story.
ADM and Bunge may benefit as farmers sell at low prices. Last week, grain traders reported that slow farmer selling had reduced their second quarter earnings. Many farmers have been holding crops, hoping that hot and dry weather would trigger a market rally. That forecast did not transpire, and farmers are now having to sell in order to free up room for this year's crops. Because of this, many are selling below the cost of production. A lack of profit has forced some farmers to reduce their purchases of equipment, fertilizer, insecticides, and fungicides.
The article that we're citing here was a Reuters piece printed yesterday. It was titled Bunge ADM to Benefit as U.S. Farmers Sell Cheap Crops in Hall of Shame. The Hall of Shame. That's an especially mean title. It adds insult to injury. I didn't write the title. That's what they printed. In any case, this is a very, very real situation. 2023 was the most expensive crop that farmers had ever planted. And I did a podcast. You guys should check out Damian Mason's podcast. It's called The Business of Agriculture. Shay Folk and I were on with Damian early in 2023 discussing this. And we talked about all the risks associated with planting this super expensive crop, right? So production costs super high because of inflation, because of other things. And commodity prices, corn in particular, I think is the crop that they're referencing here, have been poor. Excuse me. The high calendar year high 2024 year to date in spot corn futures was 473. And even at that high, 473, that's a level that's not associated with profitability with regard to 2023 old crop bushels still being held by the farmer. So even if you sold the high at 473 on the board, which I know the cash price is different, but it's just a reference point, farmers still aren't making money. And is it crazy to ask for a little bit of profit? Yeah, I guess this year it is. It's a very, very difficult situation. So there are a lot of farmers out there still sitting on old crop corn, and they're going to have to make a decision here soon. I think a lot of it is on September basis contracts, and it's going to have to be priced or rolled, if they'll let you roll it to new crop, by August 30th. August 30th is first notice day. So that week before that is when the farmer is going to be forced to make a decision here. There will be some farmers that hold old crop into the new crop marketing year. That's probably an exception, though. With regard to ADM and Bunge making money or benefiting, I know that's the headline. I don't really care about that. I care about the farmer making money, and it's just something that's not happening right now. These are very, very challenging times. I can't emphasize that enough. This is bad. The ag economy, farm economy is in the midst of a full-blown recession. I know that the regular Joe Public economy, maybe we'll get to a recession, maybe not. Ag economy is in bad, bad, bad shape, guys.
Concerns over the U.S. economy caused the stock market to crumble on Monday. The Dow Jones and S&P 500 saw their biggest daily losses since September 2022, declining 2.6% and 3% respectively. The Nasdaq also had a terrible day, falling 3.4%. Equity futures traded higher on Tuesday morning. Japan's Nikkei 225 index gained 10.2% on Tuesday after Monday's collapse. This was the best day for the index since 2008.
Look at this S&P 500 chart. It looks like Swiss cheese. We lost 6.1% in 3 days. Gaps all over the place. We're still up 8.7% year to date, but we've given back almost half of the gains for the year. There's a lot of talk yesterday and into this morning. Japan's Nikkei was up 10% overnight. So it was down 13 yesterday. It was up 10 overnight. Lots of volatility. Lots of chatter about an emergency rate cut. This has happened before. In the last 2 decades, the Fed approved emergency rate cuts 7 times. 3 in 2001 after the 9/11 attacks and during the tech stock bubble burst. 2 during the Great Recession, which was 2008-ish, and 2 during the COVID-19 pandemic. So if you saw another 1 or 2 days of aggressive selling in the stock market, I think you would see an emergency rate cut. But if we can hold together here today and through the remainder of the week, maybe not. So you saw your big collapse yesterday. You've got a marginal recovery here today. This is all following that jobs report from last week, which is indicating that, the labor situation is cooling it fairly rapidly. So we went from a situation where the Fed was too slow to hike rates to now they're too slow to cut rates. They can't win. It's very tough.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
I had to dust off some of the charts from 2022 and early 2023 because it was back in that time that we were talking about recession. And yesterday I did a primer on corn prices and recession. There are some correlations and things that you should be aware of with regard to corn, how it's acted during previous recessions, and what maybe you can expect if we run into a full-blown, not ag recession, but a big picture economy U.S. recession. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day. It goes out like clockwork at 5 a.m. Central Time. That includes our 6 most recent premium videos. All of my cash grain marketing recommendations are included there. If you guys are looking to simplify your grain marketing and you're looking for cash recommendations, you should check this deal out. Sign up this morning. I'll forward you a copy of this morning's email.
U.S. corn conditions declined slightly last week. The crop was rated 67% good to excellent nationally as of Sunday, compared to 68% the prior week. The rating was in line with the trade expectation of 67% and was the best for the week since 2020. States with a good to excellent rating of 60% or below included Colorado, Kansas, Minnesota, North Carolina, Pennsylvania, Tennessee, and Texas. USDA estimates that 46% of the crop is in the dough stage versus 30% last week and 38% on average. U.S. soybean conditions were reported at 68% good to excellent nationally as of Sunday versus 67% the previous week. The rating exceeded the trade expectation of 66% and was the best for the week since 2020. States with a good to excellent rating of 60% or below included Kansas, Michigan, North Carolina, and Wisconsin. The USDA estimates that 59% of the soybean crop is setting pods versus 44% last week and 56% on average.
The surprise yesterday in the ratings was the soybean rating. It was improved by 1%, went up to 68. The trade had expected a 1% decline to 66. That's a really, really strong rating seasonally. There are people who generate yield predictions based on the crop ratings, and those yield predictions that are based on the crop ratings are very, very strong. You're talking corn yields in the 183 to 184 neighborhood nationally, soybean yields in the 53 to 54 bushel per acre nationally, that type of range. Corn ratings declined a little bit, but they're very strong seasonally. And this is a rating here that would, again, if you're to use the ratings just in a vacuum, and ratings are deeply flawed, as I've discussed before in a lot of instances, but the ratings in a vacuum would tell you that, yeah, we're going to be above trend. So we'll see what happens. But the trade is looking at this as a negative, certainly.
Would you like to cover the U.S. winter wheat harvest quickly?
Oh, yeah, not really, but yeah, go ahead.
Okay, so the crop was 88% harvested nationally through Sunday versus 82% the prior week and 86% on average. The trade had expected harvest to be 89% complete. The U.S. spring wheat crop was rated 74% good to excellent nationally, unchanged from last week. Declines were noted in Montana, North Dakota, and Washington. The crop is 66% harvested compared to 1% last week and 10% on average.
The story with wheat is a non-story. So we don't have any U.S. crop problems. Like winter wheat harvest is moving along. It's a decent crop. Spring wheat crop appears to be one of the best crops ever, if not the best crop ever. And that's why the market has had a really difficult time rallying. We're still overpriced on the export market compared to Russia, although by a lesser margin than we had been previously. So wheat, you look at these crop ratings, you look at this sheet that we've got across the board. Corn conditions, soybean conditions, spring wheat conditions, winter wheat harvest. There's nothing here that would lead you to believe that there's any sort of crop problem really anywhere in the United States, which is part of the reason the markets have been so crappy, you know.
Hot and dry conditions could potentially damage Ukraine's corn crop. According to the Ukrainian Agrarian Council, a heat wave that occurred in July could reduce the country's 2024 corn crop by about 6 million metric tons compared to last year. The projection is similar to a forecast released by the Ukrainian Grain Traders Union, which is estimating a decline of 6.2 million metric tons. The Ukrainian farm minister, however, is only projecting about half as big of a loss. The dry conditions are also anticipated to have damaged the soybean, buckwheat, and sunflower crops.
There were not any crop estimates specifically. They're just talking about what sort of losses you could see. Last year, Ukraine's corn crop was 31 million metric tons. This year, USDA's projection is 27.7. So I guess they're thinking maybe you take 6 off of that 31. So maybe you end up with the crop that's like 24, 25, somewhere in that neighborhood. Just for comparison, total Chinese imports of corn are going to be about 23 million metric tons. That's a USDA number. So the amount of corn that Ukraine produces is very similar to the amount of corn that China imports. If this crop is actually 6-7 million metric tons light, that would be to the benefit of the U.S. exporter because Ukraine has been offering some cheap corn on the export market. That being said, this week, U.S. corn is competitive, and it's been competitive for a while. We just haven't seen the uptick in export business, which is something that we desperately need to see.
Most U.S. corn and soybean areas saw little rainfall over the last 72 hours. Exceptions include parts of Minnesota and Wisconsin. The next 5 days are slated to remain mostly dry. Wisconsin and Michigan may catch some light rains. Heavy rains associated with Hurricane Debby will impact the East Coast from Florida to Maine. The 5 to 10 day forecast introduces scattered rain for most of the U.S. plains from North Dakota through Kansas. Key areas of the Corn Belt, however, including Iowa, Minnesota, Illinois, and Indiana, are slated to remain dry. Temperatures are slated to run below normal across most of the Midwest this week.
Forecast is far from perfect. You'd probably like to see some additional or finishing rains in, parts of Illinois and Indiana and Iowa, and they're just not going to get them over the next 10 days. I suppose that the cooler temperatures are maybe the offset to that, and maybe that's why there's not really any concern in the marketplace. So I feel like as it relates to the corn crop, people feel like kind of what's done is done. I know that late season weather can change yields, but I feel like we're through the heart of the growing season for a lot of places. And soybeans, I mean, we had a little bit of scare when we had that heat in the forecast back a week or two ago, but that has since gone away.
U.S. corn shipments were strong last week. USDA reported that 48 million bushels of corn were inspected for export during the week ending August 1st. The print exceeded pre-report expectations and was also up 13% from the previous week and up a whopping 213% compared to the same week last year. Soybean shipments were at the lower end of expectations at 10 million bushels. The print was down 36% compared to the prior week and down 10% versus the same week last year. Wheat shipments were reported at 16 million bushels. The print was down 2.9% from the previous week, but up 38% versus the same week last year.
Corn shipments were excellent. That's an excellent seasonal print. We're not supposed to be that good this time of year. So USDA, I guess, correctly revised its old crop export forecast higher, and we're going to hit that target. We're going to hit the target in soybeans. Wheat shipments are actually pretty good, and some of the stuff in wheat would suggest that USDA could even be a little bit too low with exports, and we hope that's the case. We hope the strength continues. Tell us about cattle yesterday.
It was another ugly day. Feeders were down 565 to 772 lower. Live cattle were down 255 to 427 lower. Box beef somehow had a pretty darn good day yesterday. Choice ended the day at $317.94. That was up $417, and Select ended the day at $300.06. That was up $289.
Outside markets have found some footing this morning. U.S. dollar is a little bit higher. The S&P is up 39 points. The Dow Jones up 230 after yesterday's collapse. Bonds are down a little bit. Gold's up $10. Crude oil is up 41 cents at 73.35 in the September WTI. Have a great day, guys. We'll talk to you on Wednesday.